Hello traders, welcome to the weekly outlook and setups volume 309. Iliya here, and as always we're gonna jump into the markets, have a look what happened this week, and of course try to forecast what is incoming ahead of us. So without further ado, let's check out the economic calendar to see what kind of news we're gonna get this week and then get into the technicals. Alright, let's check out the economic calendar. Now for Monday we have JPY bank holiday, and then we have a speech from Lagarde. Nothing for the US dollar, but you should be also careful to be reading the weekend news within the news outlets, because that is what is driving the market a lot. And we have seen a lot of times Monday tend to open up and go absolutely ballistic. We've seen that on gold, we've seen that on the DXY as well. So be very careful. There could be something that is not on the economic calendar, but we still might get a very crazy move. Now Tuesday we're gonna have PPI and retail sales here for the USD. That is a very nice news release, so let's see how the market is gonna respond to that. Pending home sales, manufacturing index, and consumer confidence is tentative. So really nice USD day here on Tuesday. Wednesday CPI for the Aussie and interest rate for the New Zealand, so make sure to watch out for that. For me, I'm sleeping at that time, so nothing to worry about. And then we have unemployment claims and durable good orders, and then all of this seems like it's tentative here. The GDP and the PC price index. Thursday is Thanksgiving for the US, and then on Friday we don't have many news. So honestly, the only kind of day that is looking, well, 2 days, right? Tuesday and Wednesday definitely can get him some volatility, and then we have Thanksgiving here on Thursday, definitely taking a break on that day. So last week we actually released NFP for the first time in a couple of weeks. Where is it? So there it is. So we actually have good job numbers, right? So a lot better than the forecast and way better than the previous one. Unemployment claims are also better than expected. This is why they are green. The only thing that unemployment rate is heightened by 1%. But the job market being good, I do see like the Fed is still kind of battling between the interest rate cut or to keep it or to cut it, right? And this is currently what is giving a little bit of uncertainty in the market. But as we get closer to the date, we're going to be getting more forward guidance from the central bank. So we're going to see where the market's going to go. But with that being said, not much to worry about apart from Tuesday and Wednesday. Let's go to the technicals. Alright, before we get into the Dixie, just want to show you my performance this week as well. A little trade here on Monday, that was a futures trade, slightly slow profit because I did micromanage it, I believe. And then I had a really nice trade on gold here on Tuesday, and then a break even on gold on Friday. And then I see that I didn't have any tradings on Wednesday and Thursday. Yeah, it was pretty tough. Didn't manage to trade a lot of futures, honestly, this week. So only one good trade on gold, then didn't do anything. And then on Friday, there was a nice break even, then a beautiful win. But I didn't take it because it was too late. But still, pretty happy with this week and also how the month is going so far. So as you know, I am that type of guy that is preaching real trading, so I don't make a lot of these forecasts. I don't say the market is gonna go there, is not going to go here, this is where it's gonna respond from. I don't believe in these things, even though within the SMC ICT stuff, right, all these people think that you can always know where the market's gonna go next. That is impossible. So what I always tend to do is to give you specific scenarios, okay, and pretty much walk you through what I need to see happening in order for me to potentially take a trade. So as you can see here on the DXY, we've had a pretty big uncertainty, right? So the market was pretty bearish here, but then we were coming with a bullish higher time frames. We were in a weekly bullish zone, but the quality time frame is pretty bearish. So what I really needed to see is, okay, if the market's gonna go lower, I need to see it to show me it wants to go lower with a quality bearish imbalance and then trade towards the liquidity, okay? What did the market do? The first thing that it did when it opened is it opened up with a quality bullish imbalance here. Let me just move this down there. It opened up with a quality bullish imbalance, tapped in, and then immediately went for my liquidity number one. So there's your trade on Monday. Pulls back, liquidity number one, right? And then pretty much what I really wanted to see, of course, is the market to continue going higher. But why it was extremely tricky to trade this week is because we had this absolutely crazy price action. So Monday was the only trade available, and then we have Tuesday chop, Wednesday chop, all the way into pretty much kind of, yeah, mid-Wednesday, when we did have a little bit of a news release from the US. It was something pretty fast, and then the market just rocketed like crazy. That was pretty hard to catch. And then again, you can see the last 2 days were also pretty chopped up. So a very kind of it was not a choppy week, because we're going to see from the result that actually did achieve all of this. So we actually end up taking that macro liquidity, which is that weekly high. Okay, so we tapped into the weekly imbalance and we attack weekly liquidity. And right now we're coming into the weekly 50 EMA that is potentially going to offer price a lot of resistance. So I do see that we're pretty bullish on the daily, however. So this Wednesday did a very nice thing that it actually popped with a lot of aggression, and then we have 2 days of a consolidation tapping into that daily imbalance. So I am overall bullish. Now this bullish narrative right now is driven a little bit by the strong labor market that we got. Although we had the NFP released on Thursday, the market didn't do shit, but it actually moved on Wednesday. So that is pretty crazy. But there are a lot of talks that the rates are not going to get cut, which is basically bullish for the dollar. And this is why we have been seeing like this overall uptrend right here. But of course, as we come close to the December meeting, things are going to get a little bit tricky. So that daily bullish imbalance is really nice. However, what is really not nice about it is that we already tapped it and we took its liquidity. So according to my how I trade and how I understand these type of concepts, you know, I use these imbalances. They are by ICT, of course. I always give credits even within my teachings to the people that I've learned from. But to me, like, this zone has already done its job, all right? Because the market came to rebalance it and then it pushed to take the liquidity. So that's it, okay? I wouldn't trade again from that zone. I would then start looking for liquidity. So in that case, this low here, the market can potentially come and take it and then still go higher. Or for example, something a little bit more refined, let's say in the form of that hourly zone, although that hourly zone is what I would call a reaction area, because when the market doesn't immediately tap and then it spends like a lot of time away from it, then when it comes to tap, what it tends to do is just tap, react, and then pull back into the most recent order flow and then continue to go lower, okay? So basically right now we ended up the week by taking a very massive liquidity. We did not make a new hourly bullish imbalance. So I only have to work with right now with kind of two very small liquidity levels, that high and this low. All right. Is that previous daily high and low? Yeah, exactly. That's the previous daily high and low. Now, where can we be going next? Like we took that liquidity here. Now I see there's a strange gap here. So that can be the next potential lower hanging fruit if the market's gonna go higher. But again, I have to give scenarios here because when it's not like very nicely clear, we always have to think in terms of scenarios. Are we gonna pop, take that liquidity, and then from there see a reversal signal to guide us higher? That will be a great setup. Are we straight going to pop bullish, give bullishness, and then again attack the liquidity here? Those are kind of be my two potential bullish scenarios. And then of course, what I always teach is to have both the bullish and the bearish scenario, because if you only have one, you're immediately marrying a bias that is immediately going to impact your decision making, and you're not going to be able to see objectively the other side if it's presented. So imagine the market comes in right here, right, very strongly with bearish imbalances, pulls back, gives you a short, right, then it's going to go short. So if you really have like that very strong bearish intention, don't care about the liquidity, don't care about the folly bullish here. If it starts very strongly with a bearish one and you see it actually starting to follow through, look for the liquidity, and then eventually, for example, this here is going to be the next target, because the only thing to potentially stop price right now is this hourly zone. This daily zone, according to me, no longer exists. So right now, what is left untouched here, where there is a, if you pot, for example, a little bit, not VWAP. Does this have volume? Nah, this shit doesn't have volume. TVC. Yeah. Anyway, this is the DXY. I am definitely a little bit more bullish. Now, after that pop, taking weekly liquidity, we can expect for it to get back into the range. But if it gets back into the range, I will immediately be able to spot that and start attacking the opposing liquidity. So with this bullish DXY, let's see if the rest of the pairs are supporting that. All right, so here is XAUUSD. Now, again here, right, two potential scenarios. We could have had the bullish one simply because the market was tapping into a daily bullish imbalance and we had that really nice uptrend. But what it turned out to be, this is why I always look at macro market structure, is it just turned out to be yet another lower high right here. And then the market just very nicely flushed for 5 days in a row pretty much. So it was a really nice week. Unfortunately, very similarly to the DXY, like Monday here immediately opened up and it gave us that hourly bearish imbalance. However, that to me was not a very high probability trade because we were still trading against that very strong hourly bullish trend and into daily bullish and hourly bullish. So I wouldn't really take that short. Then the market came to test the EMA, again, kind of last resort, even within this OB here. chop, then broke, retested, but there were no imbalances. And then again, when that news came up, we just absolutely dumped. There was a little flower imbalance trade here that was really nice on Thursday here, but it was during Asia, unfortunately, I can see from my time, so I wouldn't have taken it. And then we kind of ended up chopping up again, but there was also a daily bearish imbalance here, and it was a beautiful trade my community took, especially on Dewey. It was really nice. This daily imbalance tapped towards the liquidity, all right? So it was like, if you carefully look here on the 1 hour time frame, it was a very choppy week all the way until this news release here on Wednesday. So then that news release came out and it was pretty hard to expect it as well. And it just absolutely dumped the market. There were a couple of little 15-minute setups that you could have capitalized on. I think some of my community members tried to take these. But yeah, so basically we can see that the euro right now is starting to fall a little bit. Weekly time frame is getting a very nice bearish engulfing candle. Are we going to go right now towards the weekly liquidity? Let's see. Dropping onto the daily time frame, well, yes, so this right now becomes irrelevant because we're really starting to push lower. Daily bearish imbalance is being tapped, we're respecting it. Weekly liquidity is just down there. We actually had a daily reaction area, but if we study right now carefully by going on to the quality time frame, we can see that this daily reaction area here got tapped, reacted, and that reaction took us into that recent daily bearish. And then from there we sold off and we pretty much broke the reaction from the daily reaction area. All right, so a lot of reactions right here. And basically this is where we're ending up right now. Not an incredibly great positioning. At least we have a little bit of a foully bearish imbalance here, although it's very high within the range. Like if I usually like this one is way too yellow. Can't even see it. I usually like the imbalances that are a little bit lower into the range. So for example, my favorite trade looks exactly like this, okay? Very fast imbalance, quick, I call this a tap and go retest, right? So it just taps and immediately goes. Like, and then if the imbalance is so much further away, it's gonna come in, it's gonna tap, then it's gonna have to wait to shift because there is gonna be a lot of bullish pressure coming into that zone. I don't like these. We're ending up Friday with a lot of rejection here under that low. This daily imbalance is already taken, so what we have right now is the liquidity. So basically what I'm going to apply right here is a very simple thought process, okay? Thinking very binary as well, which is how I like my trading to be. Okay, I usually every single morning when I do my analysis, I ask like two extremely simple questions. All right guys, so can we go short? Yes or no? Do we have a zone? Do we have this? Do we have that? No? Okay, can we go long? Yes or no? Do we have this? Do we have that? And if we cannot do either of them, we just skip. Right, and this is what keeps us profitable. So that's how I like thinking. Now, are we gonna go short? How can we potentially go short? We can pull back into that quality time frame, give an entry model, and head towards the liquidity. All right, that's potentially scenario number one. How can we also go short is if the market just opens up with a bearish imbalance and starts rushing lower. That can be scenario number two. Okay, like this. Now, there is also, for example, a long option, because if this bearish push here, okay, this bearish push for me is legit. Why? Because it has an imbalance. That suggests that there were definitely sell participants in that move, creating that imbalance. So if this followly bearish imbalance fails, however, and it gives me a reaction and a break of reaction, then I would be looking for the market to attack this liquidity, because then this overall bearish push is going to become liquidity. It's going to become weak. Okay, and I used to trade weak highs and weak lows, but solely based on market structure, which was kind of half of the picture. Okay, so right now, this is my overall outlook on you. And you might say, for example, the beginner traders or traders that are too obsessed with calling markets are going to say, well, basically EU can go up and down. Well, yes, this is what trading is all about, right? It can go up and down. What truly matters is how, of course, you're going to flow with the market, and of course, how you are going to potentially, as the market is moving, then in the moment forecast that, okay, it's showing me that it's potentially going towards that high, and then simply getting into the trade. Because many of you like to be forecasting too much to sound very smart, and I used to be that guy as well, learning all the concepts, but I was never profitable like that. And only when I simplified the concepts and I stopped calling markets and I stopped obsessing over these things, that is only when my trading became super simple, super easy, and profitability became a fact. Okay, so these are all the kind of the potential scenarios I'm looking for EU. I'm definitely more bearish bias, also based on the DXY. How it's going to play out, nobody has an idea. But what really matters is how we're going to flow with whatever happens. So let's see. All right, let's check out GU. Now, GU was pretty choppy, honestly, all the way until that news release on Wednesday. Like, it opened up, really no clarity where it wants to go, and up and down, still stuck between these two liquidity levels that we drew. And then it just imposed very strongly to the downside, took just one small liquidity level, and then it ended up consolidating. There was, by the way, a really nice trade on Friday that some of my community members took. It was exactly this one right here, where the market gave us that bearish bias on EU and the DXY, and we just went towards taking that. This was Thursday's New York low, all right, and then it ended up reversing very nice. So yeah, you can see pretty much this is what you kind of traded all the way until late Wednesday. So if you did take a couple of stop losses right there, this is why, again, like, don't forecast too much, don't call too many markets. Just wait for the market to show where it wants to go, and then you strike. So if I delete all of that stuff, because yeah, let me just delete everything. There's a lot of stuff going on here. Weekly time frame, we have a weekly bearish imbalance here. Okay, we tapped in, we tried to push lower. Are we gonna go for that low? Let's see. Daily time frame, we created a very small daily bearish imbalance, which is definitely a good sign, by the way. Signifies that overall this bearish push is strong. So let's see if that daily imbalance is actually going to get tapped and whether it's going to push price. I do like the hourly time frame. It's overall bearish in terms of market structure. Price is below the hourly EMA. Now, in terms of the current positioning of price, not amazing. Like, it came after sweeping this low and rejected, then it came to sweep that high and also rejecting. So honestly, again, like, this is so tricky because after Fridays are usually kind of ending up a little bit choppy, not really giving us a lot of clues about what is going to be happening next week. So I've been thinking to do these outlooks maybe on Tuesday or something, but then I'm not sure if anybody's going to watch them anyway. So potentially pull back into the 4-hour EMA and the daily imbalance and then getting the shorts. That will be a lovely setup. Or we just straight on going with the shorts. This is then going to be the ultimate target. And of course, below that, we have the weekly liquidity. Now, in terms of course, of the fundamentals, it has been bearish right now for a while. The pound has been a little bit weaker. Seems like the overall kind of macro stuff with the Central Bank of England is going a little bit dovish here, going a little bit more bearish. So I'm overall bearish, definitely on GU. Now, of course, I'm only going to be bullish, for example, towards this high if the market breaks and retests the hourly EMA, and also it invalidates that daily imbalance. Okay, how do imbalances get invalidated? I teach that in my bootcamp, which you can find the link in the description. But that is going to be my bullish scenario, of course, because I always like giving both bullish and bearish. So that is GU. I'm definitely more bearish biased. The only zone that currently we can work with is this daily zone. Now, if the market pushes lower and creates a new zone here, then that is definitely going to be nice. Okay. But apart from that, we just wait and we flow. So that's GU, definitely more bearish biased than bullish. So here is a pair that was definitely not bad this week. So we have Aussie dollar that was a little bit 50-50 in terms of the hard time frame. It's like stuck in a pretty big range. We did have this daily bullish imbalance that we really had to see whether it's gonna hold or not. And you can see, like, this is why also looking at the Friday's price action, like basically my strategy always is wait for Monday to open and then just flow, right? Then just flow. Because I can tell you here on Monday, okay, guys, daily bullish imbalance, hourly bullish imbalance above the EMA, like, looks like an incredibly good setup for longs. However, what is the first thing that the market does? Okay, hourly bearish imbalance, breaking below the EMA, breaking retest of the EMA, liquidity number one, bingo. What does the market do next? Exactly also what I spot here, right? It just continues to go lower, prints hourly bearish imbalances here. Was there a daily new that printed? Unfortunately not. But then again, makes another lower high here, continues to push. There is your another fall imbalance, continues to push, pulls back again here, and then it just continues to drop. Now, I don't trade this pair, but this pair was definitely not bad. So again, if you have the skill of, this is a skill that I personally don't have, but I'm not a huge fan of it, is to always be able to spot where opportunity goes and to be able to very quickly change your pairs as well. So for example, if I was looking to trade GU only this week, I would get pretty stuck all the way into Thursday, for example, all the way into Friday where the first actual trade occurred. While if I was trading Aussie dollar and I knew that this one is going to move, very likely NZD dollar is also pretty bearish, then I would potentially be making more money. Now, There is nothing new on the daily time frame on Aussie dollar, so no daily imbalances, which is not amazing. We're heading towards this ultimate liquidity level, so let's see if we're gonna take it. But is there something to potentially push price lower right now? Well, the only thing we have is this hourly bearish zone, all right? It kind of almost got tapped, but it did not tap at the end. Overall market structure definitely turned bearish. We're trading below the hourly EMA, signifying again lower highs and lower lows. So if we, of course, a very simple setup would be something like that. Pull back into that hourly zone, give us the short setups on the 1 hour and on the 15-minute time frame, and then potentially look to target liquidity number 1 here. And then liquidity number 2 is the low. This is, of course, the opposing liquidity. Now, this liquidity is going to get taken if we fail that bearish imbalance, and then we can potentially start hitting, because if the market fails that imbalance, then it's basically failing this whole bearish push, and then that is going to mean it's no longer looking to offer fair value. Now it's looking to sell, to seek liquidity. And then if we do have something like that, for example, here, that is going to be the bullish scenario. So these are our liquidity targets. That is the only zone that we can work with right now, because we don't have a daily zone. And again, like, don't trust the Friday price action. Just jump in on Monday or Tuesday, see where the market is guiding you, and then literally what I teach my private members is that they should be focused on that 1 or 2 good weekly setups. And usually you're going to get, every single week, you're going to get your good weekly setup if only you patiently wait for the weekly price action, okay, to open up on Monday and to start showing you where that weekly candle would like to go. Okay, that's it. So if this week, for example, the market opened up here, the first time, right, bearish, then bearish, then bearish, and yeah, it just went liquidity number 1, 2, there it is, right? And then you potentially stop. That's it. You caught your, you definitely could have caught the first trade, then you could have looking to take the second trade here, and then even the third trade right there. You are really good, okay? So that is Aussie dollar. Again, not bullish, not bearish. I'm definitely more bearish than bullish. However, how is it gonna play out? We gotta wait and see. Yes, NZUSD definitely looks good. So we were actually very close to that weekly imbalance. And you can see, I really thought both of my scenarios included that weekly imbalance being tapped, okay? However, and then of course I said, okay, let's see if we're gonna introduce bearish volumes with a hourly bearish imbalance. But what we see happening is that the market did try to come in, but it did not, okay? Now, unfortunately, it didn't really give us clear hourly bearish imbalances here. So we broke that structure, great, but then we kind of chopped, we came in, took some liquidity from here, then we massively rejected. In fact, we even had a little bit of a bullish imbalance here. However, I don't trade, here's a little gem right there for those of you watching NZUSD. I don't trade bullish imbalances into a bearish EMA. Why? Why do I use an EMA? Because it's a very simple way to be using market structure instead of reading like lower highs and lower lows. This tells you the average buyer, the average kind of control of the market, and it's also going to tell you a consolidation when the EMA gets flat. Okay, so if the EMA is right now, if price is below the EMA, that means that the average price action is bearish, so I don't want to long here into the bearish EMA. Okay, and then the market literally flips lower. There is your first beautiful opportunity, quality bearish imbalance, tap and go, beautiful. And then the market pulls back deeper. Does it have a daily imbalance? Unfortunately not. It did pull back here into some of these zones, reverse from there, and then we're ending up the week. Not bad, not bad at all. Now, weekly imbalance did not feel that imbalance, so it's just running away. Where are we potentially going? We're gonna go all the way down there. This is very far, so I have to look for something more recent, which we don't have. We don't have any liquidity levels here. We didn't make a daily bearish imbalance. Come on, man, that would have been nice to make a daily bearish because we don't have any zones right now to work with. Yeah, this sucks. So push lower, keeps taking liquidity, and right now on the way down, we don't have an imbalance, which immediately means to me that this high is potentially weak. Now, when you don't have any bearish zone to push, the market can do two things. It can either accumulate liquidity here and then shift, so make a high, pull back, break the high, sweep it, right, and then reverse, okay? And then from here, we can be looking for the short setup, or just very simply come and take the liquidity. And then from there, is it gonna start reversing higher here, okay? Or is it just going to sweep that and then potentially, for example, turn into this sort of bearish setup here, okay? So that is kind of NZUSD. Of course, another scenario will be the market wouldn't like to take any liquidity and it just explodes lower. That will be, of course, the third scenario. But yeah, I usually don't like it when it doesn't have any zones, nothing on the daily, for example, nothing on the quality time frame. So I don't trade without imbalances. So if I don't have any imbalances, I'm then going to be looking for liquidity to be taken. And currently the only liquidity we have is that high and of course this low. But if we go take the low, then of course our short move is already going to be over. So let's see how that's going to play out. If it, for example, as I told you, generates some liquidity here, takes it, and then it goes lower, then definitely could be a good setup. I'm definitely more short bias. It's already a little bit, it's a little bit overextended right now. You can see basically all the times that it actually makes a pretty big lower high. It does tend to like start chopping, right? And right now we did make yet another big lower high. So are we going to start chopping? Very possibly, because as I told you, we don't have any zones right now. So let's see, be very careful. I do feel like, for example, if you did participate in that short move, great job to you. Right now it's a little bit late, right? But of course, let's see how it's going to develop and if it's going to give us further shorts. So gold is again facing a little bit of uncertainty right now. We can see that we didn't get a lot of follow through this week. So we had a daily bullish and a hourly bearish. The market kind of opened up. It first, what it did, it came into take liquidity. This is, you can see it wasn't within my expectations. But again, this is why I don't expect stuff. Because if I say it is going to pull back into that hourly, it did not. And nobody knows this, right? So if you're not here to flow with the market as it starts going lower, showing you, hey, I don't want to pull back into that hourly zone because I'm starting to make 1 hourly bearish imbalances and bearish structure. Okay, so take me towards the liquidity, right? That's basically how I trade. And then pretty much you can see the overall kind of how the week finished is a pretty big consolidation. Now I did manage to take a profitable trade on gold, which is pretty nice. I did take the long trade here on Tuesday. Okay, it was based on a sweep of the previous daily low. It was based that the market was again, you can see within this bearish push here in the quality time frame, there was no zone. So if I don't have any zone, I immediately target the liquidity, right? Because the market didn't have anything to push it lower. And the moment I saw that the market is failing to continue pushing lower on the 1 hourly time frame as well, and then we printed this 1 hourly bullish imbalance here. Again, this whole move was what I call a no struggle area. There is literally nothing to stop it, but the only thing that stopped price was this 1 hourly reaction area and the 1 hour EMA, which is exactly where I took my profit. So I literally capitalized on that candle here. As I say, I'm an intra-session trader. I don't care where the market's gonna go within the next week, the next month. All I care about is where the next session is gonna go, and this is what I specialize in. And then yeah, since then there were a couple of more good opportunities here, shorts and longs, but it was a little bit too choppy for me. Now, what is gonna be happening next week? So this weekly candle doesn't tell us much. So it's a pretty choppy candle, not big, came in to very briefly sweep the previous weekly low. We still have that monthly imbalance below us. That weekly zone tapped, tries to push, but so far it's failing. And then we have a daily bullish, and then we have a daily bearish. That daily bearish zone got tapped, but now it's 1, 2, 3 days not doing anything. I would say this low here is very good to be taken. At the same time, I don't want to be very bearish because we're super bullish on gold. The EMA is bullish. We're making higher lows and higher highs. So I don't really want to call very big shorts towards 38, for example, and the monthly imbalance. But then also what the bad thing is that it is starting to chop a little bit. So money is right now starting to flow elsewhere. Is it flowing within the dollar? Is it going towards bonds as well? Okay, this is where you have to again have that skill of reading where the money is flowing right now, which is more into cash. Okay, cash, because people are scared of the AI bubble, and even I see, for example, they paused a little bit their massive investments in gold. So right now we're getting into a little bit of a kind of a triangle here where the market is starting to get a little bit uncertain into that what I call a transition area or distribution accumulation after a very massive run. So that price action is perfectly normal, but it's very important in this sort of price action to not be forecasting way too much and to only, as I tell my community members, only go for the low hanging fruits, right? So when I took that long, I didn't go for all-time highs or I didn't go for the daily zone. I went for the very first thing that can potentially stop in reverse price. Okay, so if you're looking for a long here, instead of going for that high, you go for the most recent high that you can see, which is this here. and because you can see the market reverses from there. If you're into a short right here, you don't go for that low, you go for this low right here, or maximum these lows that can potentially reverse price. Okay, so that is a very big tip I can give you on gold right now, because we don't have any fresh daily zones, we don't have any fresh hourly zones. EMA is starting to get a little bit flat. Well, everybody, we're just consolidating on gold right now. Yeah, so basically from that low to this high, drop a rectangle, drop the middle line like that, and you can very perfectly see how the market is just oscillating between that middle line. That is a consolidation. I define a consolidation by two things: either imbalances not being respected, okay, or just the non-creation of imbalances. So honestly, I'm sorry everybody, but I don't have a bias on gold. So what that means is I'm just gonna chill. I'm gonna show up on Monday, see where the market guides me. Is it gonna start guiding me towards the lows here? Is it gonna start guiding me towards the highs? Where is it going to start breaking structure? Where is it going to start creating imbalances? And then I'm very literally going to flow, because I can draw you 1,000 scenarios here, right? It can come and sweep and go. It can break out. It can sweep down and reverse. It can break down. It can chop. It can continue to sweep. Like, there's so many things that can happen and nobody knows. Okay, so unfortunately this is GOAT. No zones to work with whatsoever, so I don't have any forecasts to make. So I know you're unhappy with this, but that's just how it is right now. The opportunity of this week was basically in USD JPY. This thing gave us the signs immediately upon the market open. Now again, it wasn't exactly very clear here as we started up. There were no zones whatsoever. And this is why I'm always telling you guys, like, this is why I'm starting to get really demotivated to be doing these outlooks, because I've really changed the way how I trade. I don't forecast anymore. I just show up and flow, right? This is where the big value, for example, being with me is being in the community to follow my daily analysis, because there it is. It's that simple, right? Don't say it's gonna go here, it's gonna go there. Like, wait to see where it's gonna guide you. And of course, you need your strategy, right? Breakout above, fall imbalances, tap in long. Breakout above, high, fall imbalances, absolutely bombastic long. And even during our webinar with my team, we broke down this long here, we broke down this long right here, and we also broke down this long right here, and then even this long right there. I don't trade USD JPY because it doesn't do moves like that consistently. So anytime you kind of start trading USD JPY, it kind of ends up into a very big chop. And then it's gonna have some massive breakout periods all of a sudden, but then they're gonna happen after a crazy period like that. So I don't like this pair. I never found success with this pair, but that's just me. Okay, now this is forming a very crazy weekly candle. Where did it stop? Well, we didn't have any sort of reaction areas here, so maybe something on the daily time frame is stopping price here. Yeah, kind of seems like roughly around this OB here, but no liquidity was taken and no imbalance was tapped, so we basically just reached a pretty big high. Now here we're having a daily bullish imbalance, but after that massive crazy run up, look at that, look at the bearish candle that is entering into the daily bearish imbalance. This massive daily bearish candle is creating a lot of opposing strength. All right, so is that profit taking? Is it a reversal? I don't know. However, the market is making a pretty deep pullback right now, which I don't like. I don't like deep pullbacks. Literally, my best setups are the shallow pullbacks, right? Something like that. Hourly zone, tap, boom, go. These are the best setups that I'm taking. Tapping into daily, hourly time frame got taken and is following through lower. So currently, you can see a lot of strength is coming on the bearish side. And if I go to the 1 hourly time frame, price is dipping below the 1 hourly EMA. So how I would like to take a long trade right now is literally to wait for the 1 hourly time frame to break and retest the EMA to start building with the bullish confluences and to potentially get a 4 hourly bullish imbalance with that. If we do get a 4 hourly bullish imbalance, I would be very happy if I was trading UJ to take a long trade. Okay. But if not, if we continue to go lower, like for how far can we that? Like that's the next big question. Like the most recent kind of low is here. The market has 1,000 hourly bullish imbalances here, but within this very big bullish push, there is so much imbalance to fill, right? You can see every single imbalance here. There is very little orders, very little to minimal orders, or just one-sided orders. So it's very thin. And when it's that thin, the market does like to potentially pull back to fill it all. This is why we're getting that very deep pullback, right? It's coming to tap into this imbalance as well. So it kind of went into the very almost the last one. Now we have this guy as well. Is it gonna go all the way down there to also test the hourly EMA? Definitely could do so. But again, as it comes right here, to me, that is gonna be extremely bearish. And I wouldn't like to long it anymore, because then I'm trading against all of that massive bearish trend, and then I would much better forecast that the market is gonna go take out this low. Okay, so that is basically USD JPY. It had an incredible week, and usually after such an incredible week, the next one tends to be not so incredible. So if you are late to the party, you are late, and you have to be very careful right now not to make too big forecasts that is just gonna reverse from here. It's gonna go to the all-time high. No, just relax. Wait for it to show you where it wants to go higher. That is gonna be it, right? Potentially a break of structure above that high as well is gonna give me a lot of confidence for the longs. But if it continues with the shorts and hourly bearish imbalances, I will start forecasting potentially this low to be taken. So be very careful, okay? If you don't get the bullish signs immediately, that very likely means that the market might want to go and take some liquidity. So be careful with UJ, but overall, again, bullish bias. Now that's going to depend if the DXY is also going to continue climbing. So watch out all the narrative. Black Friday is approaching, so if you're looking for good deals across the prop firm space, I recommend Prop Shop Trader, a real prop firm that pays the traders that are actually following the rules. They have a 70% off on their Instant Gladiator, which is straight to fund it. So you just buy the challenge. There is no challenge, actually, you just go live trade. And of course, there are evaluations, which I can give you a much better deal of, which is for 90% using code Fanatic90. So of course, you can go here if you want to go for a warrior account evaluation, definitely go here and use code trading Fanatic90. But if you want to go with an Instant Gladiator, there is no code needed, and we are getting like a 70% off, which is absolutely crazy price, right? You see, it's like $550. This is how much a Forex challenge is costing. But if you want to go here and immediately start trading for a payout, right, you're getting it for freaking for $160. 50K account instantly funded that you can get a payout within a week. I think they have like for the first payout, you need to have like 6 trading days, and you need to reach like a profit threshold of 2,600. So you still need to make some profit, but instead of doing challenges and then passing and this and that, you're getting it, right? But if you also want to go for the evaluation account, make sure to use code trading Fanatic90, okay? And then that is going to give you the 90% off. So if you enter warrior right here, and then if you pick your 25K account, and then it's gonna be 160 per month, but that's gonna be wrong, because if you buy now, and then if you go all the way down here and you have a coupon, enter the coupon code trading Fanatic90, apply it, and then that is gonna turn out to $16 a month for your 50K challenge, okay? And there should be, of course, at the end, if you pass it, a small activation fee. Prop Shop Trader, check them out. They're running their Black Friday discounts right now. I think they're about to close them right here and just in a bit, so make sure to act fast. All right, so let's have a look at the futures. So we're gonna get started with the S&P now. Yeah, we basically tapped into this daily imbalance here. The first thing, yeah, I mean, pretty nice development. We tapped into the FOH on Monday. The market guided us into the daily, and then from the daily we sold off. I mean, absolutely beautiful development. This is exactly this scenario here. The market taps into the hourly, drives us into the daily, and then from there it just sells off. Even here we had that hourly bearish imbalance that got tapped and fulfilled the liquidity. So beautiful. That is basically how I analyze the market every single day, but it's very hard for me to say like what it's gonna do for the whole week, because I do these every Sunday. Now I can start doing back at the Wednesday ones as well, but I'm not sure if like yeah, you guys finding them valuable or anything. Anyway, we did take a very important liquidity point here on the weekly time frame. From that high to this low, we're dropping 6%, which is a pretty significant pullback, I should still say. On the daily time frame, we don't have daily bearish imbalances, which is a great idea. We had that very nasty sell-off on Thursday, which was after Nvidia reported incredible earnings, and then just after the earnings, the market just plummeted, which is pretty strange because it's good news, but then it's pretty much buy the rumor, sell the news. Currently, hourly bullish, and then into a hourly bearish. it is extremely tricky right now to determine direction, because we are in this sort of a period right now of a lot of it's not uncertainty, but it's just like the market is starting to get a little bit less optimistic. While when we were in that beautiful uptrend, AI, great, right now everybody's talking about a crash, and then this kind of talks about the crash tends to shift a little bit the market sentiment, and it tends to put some money out of the stock market. I do believe a lot of stocks were definitely overpriced. Right now we're having some of the big names making pretty big pullbacks, especially the tech stocks. As you can see, like the Nasdaq drop is definitely a lot more significant. We almost tapped like 10% drop. So basically, yes, I am, as I keep telling you every week, I don't swing trade or even day trade the ES. I mainly scalp it, and I scalp it for only 2 hours per day. So I literally don't care that much where the market's gonna go. Okay, I perform very macro analysis for my investings. Okay, for my investments, but for this type of approach, I don't. Now I can say, well, following bullish imbalance is gonna tap and hold, then we're gonna encounter the EMA. Is the market gonna break and retest the EMA with a following bullish imbalance? That is gonna be the bullish scenario potentially. Okay, and then if the market potentially destroys that quality with a bearish, then we potentially, right? I constantly keep using that word because that is one of the main things I learned from a very old mentor of mine. He always used that word, and then he was actually the one, RoxFX, who always used that word potentially, that installed it within me back in the days to think in terms of probabilities and not really be certain about any outcomes, because it's all potentials, it's all probabilities. So that is ES. We can definitely expect a little bit more of a bearishness, because as that fear and that kind of a thing continues to grow, it's like adding fuel to the fire. We can definitely continue to drop lower, but of course it's really going to depend on the big institutions that are actually moving the markets when they're gonna start stepping back up. We are right now in a pretty significant pullback, so if the market is gonna start picking up, it can potentially pick up from here, because we did pull back to take a very significant point. What I don't like is that we're starting to dip below the 50 EMA, which is kind of signifying right now that the trend is coming to a little bit of an exhaustion. Okay, so let's see how far we can go. I'm still a little bit more bearish, but on the first signs of longs, I'm gonna be longing. Nasdaq, pretty much the same as ES. Like, we pull back into that 4H, we got into the daily beautifully, and then from there we beautifully sold off, following bearish imbalance form here into the liquidity that we marked, and then from that liquidity here, the market really nicely rejected higher. And then Nvidia earnings, pretty positive. The market opened up at the New York Stock Exchange, created a little bit of a manipulation, and it just absolutely plummeted. So a pretty nice week in my opinion. The early week, very nice sell-off. Then we had a pullback, and then Nvidia earnings really crashed price. Now, as I said previously, we're having a 10% pullback right now, which is pretty significant from top to bottom right there, almost 10%. Now, if we look to the left, so where is the market going right now? We like have a weak monthly bullish imbalance all the way down there. So is the market gonna make us a 13% pullback? Definitely possible. Doesn't sound that bad, because right now we're taking a very major weekly liquidity point. Now, is the market gonna flip from that liquidity point? Let's see, because if it does not, then it's very likely gonna target the next one, which is all the way down there, because we don't have any imbalances. The only imbalance we had here was that guy, and this guy already did his job. So I wouldn't say we're tapping into this imbalance again. We're tapping into the liquidity right now that mitigated the imbalance. Okay, daily time frame, no daily bearish imbalances were created, so Friday invalidated it, which is great. And then we pretty much go on to the quality time frame, where we have this absolutely crazy flush that can definitely get rebalanced, because the stronger the flush is, the higher the likelihood that the market is going to recover to fill all the imbalance, because there is going to be some crazy thin volumes. Like you can see here, it's all sell. Just the buyer started accumulating down there where they were like taking profit. So all of that stuff here can absolutely get filled. Okay, so if I go to the quality time frame, unlike ES, we don't have a quality bullish imbalance, so we just tapped into the bearish one. And yeah, if we do get, for example, some more bullishness, I can say it can guide us into a short-term liquidity target. And yeah, if it guides us lower, of course, we can be then going for the lows here. And then honestly, there are no more, I wouldn't go take like quality targets because I'm gonna get too many zones. Because if I go here, like I'm gonna have to take 1, 2, 3 zones on the 4H. I wouldn't like that. I would just prefer to stick to the daily zones for now. So yeah, when does the contract expire? Ah, there's time. So yeah, this is Nasdaq, very similar to ES. I'm definitely a little bit more bearish. However, what we should be aware of right now is that we took some crazy liquidity after that crash here on Friday. What was that? There was some crazy crash. We kind of came in to take the liquidity of that low. Okay, so that is very important right now. So are we gonna start stepping up from here? Is this downtrend, this little downtrend over for the market to start resuming higher? Go and study, like in the past, what happens after like a mini downtrend like that. Okay, the market does tend to continue going higher if, of course, the situation is not very bad, which I don't think it is bad for the stock market. Definitely, like Nvidia reporting some crazy earnings. Everybody's skeptical about AI, and then they report that they're doing great, but they're selling chips, so it's not that much of AI. Like, yeah, I can go on a very big rant on that, but I won't. So anyway, those are the technicals. Not a very big clarity in terms of macro direction. The only key thing is that weekly zone that was taken. If this volatile zone fails, and if we start creating bullish zones, I will be looking to target the liquidity on top. And US 30 finally, yeah, so we just flushed on that one very nicely. Again, we had that daily imbalance, but it was giving us a lot more bearish structure than the rest. And yeah, we can see it just opened up and it just plummeted. And then overall, more bearish than the rest. If we studied the drop right here, it is, yeah, roughly 6% similar to ES. So where are we? We haven't taken yet this liquidity, so there is still some space to go. Daily time frame, we had a daily bearish imbalance that we tapped. So very bearish, this index. Like it was forming a lot of daily bearish imbalances here. Now we did tap into these two here on Thursday, tapped in, reacted. And basically this here is a very nice target that we did not take. But then on Friday, we kind of had a little bit of optimism and the market ended up popping higher, creating that volatile zone. So I don't know, with this very recent bearishness right now, it's gonna take not a lot of time, but I really need to see some very clear structure shift in order to say that I'm gonna be back into bullish mode. Now these two daily imbalances did their job. They pulled back and they took liquidity. Okay, so right now the market did pull back into this volatile zone, but what I see this volatile zone is doing, it's immediately getting flipped for a bullish zone, and that can potentially open up these two liquidity points. So is the market gonna do something like that right now? All right, and then what is gonna happen after we take this liquidity? Is it going to break above and target this, or is it gonna sweep and then target this? Like this is it. It's always binary, but it really depends on your approach as well and how you think about the market. Okay. Yeah, and is of course the other binary is if the market going to fail that volatile zone, build something bearish to show us on the lower time frames, and then that is potentially going to guide us into this liquidity. Of course, the first low hanging fruits, that guy, then this guy, and then finally this guy. Okay, that is US 30. Wait to see what's gonna happen, and then we strike. Alright, Fanatics, let's throw a little bit of a recap. I am definitely more bullish on the DXY. We are kind of oscillating right now within the 100 level. The bad thing is that we don't have any daily or hourly bullish zones currently, so I do expect some sort of a liquidity grab to the downside. And then, of course, the question is, if we break liquidity, are we going to reverse, or are we going to continue lower towards the opposing liquidity, or are we just going to pop higher? EURUSD definitely a little bit more bearish bias. We're getting towards that weekly low. So I do feel like with this very nice downtrend, we can definitely say with a little bit more certainty that the market can potentially still attack that weekly liquidity. So if we do get some bearishness towards there, I will definitely be looking to take shorts. GBP USD in the meantime, it is also kind of going from that weekly zone towards that weekly liquidity, but it has been so far pretty choppy. It does have a daily zone, so let's see if it's gonna tap into that daily zone and give us the shorts. Aussie dollar and NZD dollar, very bearish, but they feel like they're already over. You can see on NZD USD, we're at a massive lower low right now, and it does tend to make pretty deep pullbacks when it does create such a massive lower low. So I wouldn't expect a lot of shorts. Meanwhile, Aussie dollar, it's kind of looking like the same. Gold, extreme uncertainty right now, just being stuck between different type of zones. We do have a very macro zone below us in the form of that monthly zone, but currently we're just really oscillating, right? So this can be a lower high of that one, it can be a higher low of that one, and this means that we're right now starting to squeeze a little bit. So there is potentially going to be a move incoming, but it's pretty hard to forecast that move. So what I'm just simply doing is I'm waiting for it. USD JPY, absolutely crazy rally this week. Right now we're pulling back into daily imbalances, we're pulling back into hourly bullish imbalances. But when the move is that voluminous, the volumes are very thin in this way, and then the market does tend to make a very deep pullback or even attack the opposing liquidity. So the market already created a pretty deep pullback. It's pulling back into daily zone, hourly zone. So I would need to see the market shift to bullish with a hourly bullish imbalance and break above the 1 hour EMA to confirm that all the trends are aligning. And of course, indices, they are having a little bit of a drop right now, a little bit of a dip, correction, whatever you like to call it. We did take very important levels, weekly level here from that very nice flash crash we had right here. Then it took the market a lot of time to recover, but right now being in a little bit of a downtrend, it is looking pretty good for potential continuations lower. But if we start getting quality breaks of structure above and like clear uptrends and violation of major lower highs, that is pretty much going to be the signal for me to maybe start looking for longs, which is going to be above this liquidity here. And yeah, basically ES and Nasdaq are the same. The Dow Jones here, the US 30, it is also looking pretty bearish, mitigating daily imbalances, printing quality bearish, but like the rest, it has a quality bullish that can cause the market to attack that recent liquidity. So basically within the indices, ES also has that one. So I'm really looking to see, is it going to pop higher to then attack liquidity, or is it gonna start picking up again lower with some pessimism from investors to continue with the shorts? So that is kind of my overall outlook. I don't have a favorite setup, honestly. My main pair gold right now is starting to consolidate a little bit, making it pretty hard to trade. This is why I'm looking to diversify a little bit into EU and GU, but they're also a little bit tricky right now, so really staying on my hands. Let me know how you guys are performing, what kind of trades you're looking at and what kind of trades you're trading. How is November treating you so far, which is coming towards the end? Let me know in the comments, and I'm gonna talk to you in the next one.